Today, let's dive into SoFi's latest performance and explore some recent data points to understand the current market situation. We'll break down the factors influencing today's developments and speculate on what's ahead. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. To start, SoFi's stock fell by 5.04% in after-hours trading. Although it appears stable now, Amazon's recent earnings report indicates a double miss for SoFi in both earnings per share and revenue. We're still awaiting future guidance, which promises an intriguing day tomorrow as the market reacts. A significant 49.2 million shares were traded, compared to the average of 38.9 million. Notably, some large transactions exceeding $100,000 took place on the secondary market, primarily as sells during the power hour, giving the stock a brief boost. However, a lot of selling occurred, prompted by initial jobless claims data showing 249,000 versus the expected 236,000, which isn't ideal. In my pre-market video, I mentioned that the market's reaction seemed positive despite the negative jobless claims. One analyst pointed out that this data might slow down the Federal Reserve's rate cuts, potentially harming the stock market. Despite Fed Chair Powell's statement that a 50 basis point cut isn't being considered, the probability of such a cut jumped from 7% to 26.5%. This increase could be interpreted in different ways: cutting rates to combat or defeat inflation, or to avoid a recession, the latter being quite alarming. The broader market seems to be pushing for rate cuts regardless. Interestingly, even after Powell's remarks, there's now a 73.5% chance of a 25 basis point cut for the September 18th meeting. Despite no specific news for SoFi today, an unusual pattern emerged. Across various stocks, including heavily shorted ones, short sellers began returning their positions. This behavior suggests that today's market reaction might have been an overreaction, or large entities could be mitigating risks by covering shorts on multiple stocks, not just SoFi. Today, short sellers returned a net 600,000 shares of SoFi, with 16.79% of the free float being shorted, amounting to 175.6 million shares. Utilization stands at 55.32. The short score is 71.89, and the average cost to borrow is 0.55. Interestingly, some brokers are paying people to short SoFi, indicating potential market manipulation. Regarding analysts, Mizuho Dan, with a 50% success rating, recently set a $12 buy rating for SoFi. It's noteworthy that bullish ratings for SoFi often go unnoticed, while bearish ratings garner more attention. This dynamic underscores the challenges SoFi faces in gaining positive market sentiment, despite not being a fundamentally damaged company. Now, let's look at options activity. There were $5.39 million in call options and $1.8 million in put options, with 51% of today's options being bearish. A significant transaction occurred between 11 o'clock and 11:05 am, involving $237,000, indicating substantial investment in SoFi. Call options are mostly targeting the $7.50 to $8 range, while puts are targeting below $7. This pattern suggests potential manipulation to suppress SoFi's price below $7 by tomorrow. Open interest shows $23,000 at $7, $42,000 at $7.50, and $106,000 at $8, highlighting strategic positioning by investors. I've previously suggested using options strategically, such as selling puts or calls when SoFi's price moves significantly. This strategy can mitigate risks and capitalize on price movements. While some of you might have lost money initially with options, the experience is invaluable and will eventually lead to a better understanding of the market. SoFi is currently trading at $7.16 between the S1 and pivot points. The next resistance is at $7.25, with strong support at $6.52. Although a drop to the $6 range isn't ideal, it's a possibility based on technical analysis. The stock remains in the higher percentile of the Bollinger Bands and might shift to the lower percentile tomorrow. Key support levels include the 100-day moving average and the 50-day at $6.90. Stochastic indicators are neutral, neither overbought nor oversold, but show a bearish deviation. Retail investors seem to be selling, adding to the downward pressure. In summary, SoFi's recent performance and market dynamics suggest a complex and potentially volatile situation. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.